Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today is March 7th, 2021. This is the weekend market review where we'll dive into various different segments of the market from a weekly perspective to give you a sense of where we've been, where we are, and where we may be headed. And I apologize in advance. I've got, excuse me, allergies here, and we'll try to fight through them here. So, starting with copper. Copper is still very much in bullish territory here. And while we pulled back in a very healthy way to the trend line back around the 3.94 area. So until this trend line breaks with conviction, I don't see copper as going into any corrective phase anytime soon. But I think what's more likely here is a consolidation between the 3.8 and the 4.4 area for a period of time here. Gold. So gold continues to be in a very, very long-term cup and handle here. The breakout of this uh, long arch pattern here, rounded bottom. Now we're in this very extended bullish flag. And yes, they're trying to push this and break this flag that most people see to the downside. Perhaps they extended the flag here. And it's theoretically possible we move back towards 1650. But I think that my hunch is that we're very, very close to a bottom, if not already there. The one thing I will say is that momentum is not yet showing signs of a bottom. Yes, I'm seeing signs of a potential bounce, but there's been a lot of technical damage. So until this trend line breaks to the upside here, I'm not comfortable going heavy long into this trade. I want to see this move to the upside with conviction before committing significant capital once again to the sector. But with that being said, I do think that this is a great risk reward opportunity from a value perspective to get into the trade. Gold bugs. So gold bugs. Here's a very interesting perspective here again that we're very, very close to a bottom. We had a 5% up week even as gold was down. So there's a potential reversal in the metals to the miners to the metal, and that's what you want to see. But again, I want to see this downtrend in RSI break to the upside. It's great that we closed above the 38 RSI level. We closed the week at 39.27. But next week will be very important. We also need to close above these downward sloping moving averages, right? There's going to be a lot of resistance over the next couple of weeks, perhaps a lot of volatility. But if you can close above that, then that would be sign to really go into this trade once again with conviction. Here are the gold juniors weekly. And again, they found support here at that 38 level, which is precisely where you needed to find support. This is also the level that was a bottoming point for several points in this rounded bottom cycle. You had support here at the 38, you had support here and here and here and here and so on. And even in March when we broke through that level, really the breakout really occurred once we cracked back above it. And frankly, much of the breakdown from 27 all the way to 19 happened when we broke below it. So again, that 38 level is very key, and we found support there. So the question becomes, do we go V-shape up, or do we consolidate here for a while, which frankly would be healthy in my opinion, and then you create the breakout. GDX, gold majors, same sort of story. This 30 to 31 level is critically important to hold. If that level were not to hold, then I think the entire thesis of a gold, the technical thesis of a gold bull market becomes questionable. Not necessarily over, because when you look at it from a monthly perspective, we're still very much in it. But from a weekly perspective, it would be damaged significantly. But again, this is the trend line we got to watch, and we'll have to see how it plays out. All right, crude oil. So crude oil, we've been covering this chart for quite some time. Clearly, probably the most bullish commodity right now, perhaps outside of copper. Severely overbought condition, but like I said, that's where some of the best gains do occur. I mean, we moved from 50 all the way to 65, 66 in no time. And the question is does it have enough energy to move towards 75, 76? Frankly, I think it will. Based on the look of this chart, close at not all-time highs, but multi-year highs here, and I think it wants to move higher. So I wouldn't be chasing this trade at this point. The really good trade was in this region here, But nevertheless, it's good to see for the general economy to see energy pulling through like this. Marijuana Life Science ETF. So right now we had a breakdown in RSI here, and while I wouldn't be surprised the markets rallying back here. We'll see some of the other charts momentarily. So if the markets rally, I wouldn't be surprised to see perhaps a back test here of this RSI trend line. But right now, my conviction on the sector is no longer high. No pun intended. This was a blow off top here, and it hit I mean, it was a major run, very, very fast. So perhaps a multi-week, multi-month consolidation here between 11 and 15 here would be very healthy. So I want to see what happens, but I wouldn't any longer be running after this trade with conviction. Likewise, Palladium continues to consolidate. There's really no interest anymore in Palladium now that Platinum is technically breaking out. Um, at some point, this trade is going to get interesting if it either breaks above 2,500 or breaks down from this long-term consolidation here. So platinum is really the story here. Why Palladium has been acting weak, because platinum and palladium are kind of a pairs trade, and platinum has been in a long-term basing pattern here, and finally broke out around that 1050 area, the neckline, and really took off. And it was quite the move here. Now we pulled back, and was it a surprise that we pulled back at 1350? No, because that's where resistance was really coming in long term. And so the question is this pullback over? And we'll see. I mean, it found support here at the 13-week moving average, which is a logical place to find support. That look, the reality is when it comes to pullbacks, it's very, very hard to, especially violent pullbacks like we had in the general market. It's hard to know where there's going to be support till after the fact. That's just the reality. We can draw some trend lines and so on, but the reality is it's only after the fact that we see. And now it's a question of whether there's follow through on this bounce, or do we find support here around 1100, perhaps build another base. And so that's what we'll have to look at daily, hourly charts and so on throughout the week to see if platinum has indeed bottomed. But in terms of a conviction play, what you want to see is a breakout above 1350. That's where you're going to see a follow through potentially to the upside. But platinum is definitely the most bullish metal right now, precious metal, and that's where you want to be on a momentum trade. Silver is the trade that most people expect to be the breakout trade, but it hasn't happened. And one of the biggest reasons is this negative divergence when we had this secondary top at 30 and higher high with substantially lower divergence. This was a trigger that things were not looking good for silver. Question becomes, do we find support here at the 50 RSI level, which would be very, very important, or if we break lower there, then potentially what we may see is a retest of this arc pattern all the way down towards that 22 level roughly. So don't have strong conviction on silver right now. What you'll see momentarily in the miners is that silver miners, which were leading the trade, are actually acting weak versus gold, and gold miners are starting to improve on a relative basis. So you see, we have a trend line here that's now clearly defined with 3 points. The more points that a trend line touches, the more it has veracity to it. Bottom line is we're in this consolidation between 12.5 and 17. There's going to be a lot of up and down volatility until it's broken one way or the other. It's hard to suggest that we're in a bull market or bear market right now. It's in a consolidation. The point is, I want to see this uptrend either break out, or potentially right now it's hovering at that 50 level, just below it at 49.70 on the weekly close. If it breaks lower, then I expect to see a substantial flush down here, potentially one that goes all the way to 12.5 and potentially even flush out below that point. So be careful with silver longs right now. They're not necessarily in a very strong place right now. Here are the silver majors, which had been doing quite well, but again, you had a trend line that's been developing, and you broke down last week. The question is, where are we going to find support here? Potentially, this is a bullish flag, but it's not a clean one, and perhaps we found support here. That would be fantastic. But if this flushes lower to test this 38 level, which is really where again we had support for a lot of points and breakouts above the 38 level. If we need to touch this level still, that means that we potentially can go all the way down towards that 31 level on the silver major. So potentially another flush lower is possible. I don't think it's going to happen, but we have to be open to that possibility right now. All right, Uranium Participation Corp. So this one continues to be extremely bullish, and even though the chart is extremely noisy here, right, between 350 and roughly 550 to the upside, it's been in a range bound for 5-6 years now, right? But what's happening here on RSI is the key component. Momentum is consolidating right below the 61.8 level, and it's a very, very close to an upside breakout. Once that breakout occurs, notice this is the point that had tremendous amount of resistance in the past, here and here and here and again here. So, and all the way back here as well. There have been a few points where this broke out, but not too many in this 10-year cycle. And so the point is that if this breaks out, there are a number of factors that suggest that this is going to be a legitimate breakout that's going to be very, very volatile to the upside, so, or explosive to the upside. So the point is, here's the question that I'm asking myself: have the uranium miners that have rallied significantly over the last 3 to 6 months, have they priced this in already, and therefore would this breakout be a non-story? Or on the other hand, is this was that a repricing with the hope that this breaks out, and if this breaks out, then all of a sudden the miners begin to rally from there. My hunch is actually the latter case. I think that uranium miners, if this breaks out from $5 to $9, I think the uranium miners double and triple from here, because the story will get extremely explosive. And since nobody knows the future, we'll have to see the way it plays out. All right, online retail ETF. So this one was extremely bullish, creating higher highs, higher lows, which is what you want to see, and it corrected. That's a healthy process, and right now just back tested the 61.8 Fibonacci level, and this back tested this trend line. So I think that we've probably hit a bottom here, at least for the time being, and we may want to consolidate here for a while, but I think we're going to continue our uptrend in equities here. Dow Jones 2500. So not same story, but an interesting story here. The 69.1 level served as resistance. This is where back in February was the point of resistance, and from there we really broke down. So we broke out here back in late 2020, couldn't re-enter this overbought territory, and then we broke down. This was the same level that we broke down from in 2018, right? So this 69.1 level is a critical level, and the question is, are we just starting a new breakdown, which a lot of folks are talking about? Certainly, MACDs are pointing to more downside potential. Or are we just consolidating for a while here above the 61.8 level, which would be a very healthy consolidation that's going to result in a major breakout? The consolidation that I'm talking about here was what we saw back in 2018, right? Yes, we broke down, but then we created a major move to the upside. We had a similar consolidation here as well, where we consolidated for a couple of years, right? And then we broke out. So time will tell which direction it goes, but certainly the markets were overheated and needed a cool off. I think we got the cool off. The question is, are we ready for a reflation breakout to the upside, or there's just going to be consolidation with range-bound volatility? Emerging markets. So emerging markets were in basically a vertical uptrend since March, and have potentially broken this trend line, but again, found support here. And now the question is, are we going to consolidate for a while here, which is my base case scenario, and eventually break out? Or are we going to consolidate and potentially break lower? Time will tell. Because emerging markets are so heavily kind of rooted in commodities, and which are extremely bullish My hunch is we eventually break out, but time will tell. The 61.8 level is a critical um, area of support and resistance, and we're right below it. But potentially next week, if we get a follow through, we're going to break back above it and potentially create a new rally. Question is how far it goes. Do we stall at that 69.1 level, or do we move higher? Housing. So watching housing didn't it did pull back right here, but it found support, and housing continues. This is an interesting sign. We'll take a look at the 10-year treasuries in a second, as well as the banks. But look, the reality is this pullback was the result of treasuries breaking out much faster than the market anticipated them to break out. But if you've been watching our videos, this breakout did not surprise you in the treasuries. So housing is a very much inversely correlated to interest rates, right? The ability to borrow. So if you look at this downtrend here, to me, it looks like this downtrend is going to break eventually, and housing is going to make new highs. What does that tell me about interest rates? Well, that tells me that interest rates probably aren't going to move higher for at least for the time being. And potentially what we might see is a breakout and then a fake breakout to the downside. I don't know. We'll have to be watching this very closely. Markets are very interesting in that regard. But this chart to me seems quite bullish and very healthy for the overall economy. Microcaps, they pulled back pretty handily, 10 to 12%, all the way to the low from 154 to 134. But this to me is a bullish flag, and the RSI trend line is still very much intact, and we still are above the 69.1 level. So microcaps continue to be bullish until proven otherwise. Nasdaq. So Nasdaq has a very clear downtrend in RSI here, right? With five points here at least. And so the question becomes, was this the bottom we hit? We hit the 26-week moving average here, and we bounced really nicely. I think the worst case scenario on the Nasdaq is 12,000 here. So while I think we've probably hit the bottom, I think there's been a lot of technical damage, and we'll need to consolidate here for a while before I can say with conviction that a breakout is going to happen. But again, I don't care so much about price. I watch momentum, and right now momentum is not strong. So if there is a situation that causes more market pressure to the downside, Nasdaq is going to be taken down. With that being said, here's the RSI level where we found support on the last pullback. So not a surprise that we found support here. And if we rally at this point, the question is how far this rally goes. Is it enough to back test this level here, which would be a really, really nice rally, but if it cannot break out, would be very, very bearish. So Nasdaq is going to be a critical area to be watching over the next couple of weeks and months. Regional banks. So regional banks, like I said, very correlated to the 10-year treasury. The steeper the yield curve, the more margin and profit these banks make. And so this has been just basically a one-to-one correlation with the rise of the 10-year treasury here. Question is this, and this trend line extends all the way back into the last two decades ago. Really nice bullish divergence here. So there's really no sign that this is a weak rally, very, very strong rally. The question is, has it hit a point where I'm not comfortable holding? And I think so. So I think we're going to see a pullback in the financials here, or a relative pullback relative to the markets, perhaps a consolidation, and that's going to be playing a role in the pullback in interest rates, and I think that's going to create a really strong opportunity for the general equity markets led by tech to balance and rally. In terms of the S&P, it's right now, 3,700 is the support level here. I think that's a very strong support level. There are a lot of RSI points of support as well that we hit, and I think the S&P is going to be ready to rally. Question is if it's going to go straight up or consolidate. Based on the technical damage, I wouldn't be surprised to see a few weeks of consolidation here before the MACDs really set up a move above 4,000. About 4,050, 4,100. And if that's the case, then, like I said, we've got more upside in the equity markets. But perhaps the uptrend is over now in terms of momentum, and we'll have to see if this particular downtrend does not break, then what I expect to see is eventually a move to this point and then a rollover again, and that could could potentially present a very very volatile moment in the markets. But we'll get there when we get there. Semiconductors had a very strong pullback again, and but found support at this trend line here, which happened to be that 26-week moving average. So the one area that I will point out is RSI broke down uh, well below the 61.8 level. But again, it's if it rallies around this level, this is where it's rallied before previous breakdown. So potentially we have a fake breakdown and we start rallying to new highs. So that's kind of how I see it right now. Shanghai Index, you've got a very strong 6-year rounded bottom, and you had a breakout here and pullback, potentially a back test. And I think Shanghai is going to be one of the best markets to own and trade over the next 5 to 10 years. I mean, just looking at this chart, this is a gorgeous chart. And if I had to choose a market to invest in just based on the charts, Shanghai is the one I would go to, well above any other that we've covered so far. In terms of larger equity markets, shipping continues to look very strong. That tells me that commodities continue to do well, and I think shipping is going to be making a move towards that 22 area sooner rather than later. Shipping reminds me a lot of the marijuana ETF that we covered earlier, but the difference is the marijuana ETF looked like it was breaking down. This one looks like it's just getting started. Small caps, very very bullish. Small caps continue to be in this overbought territory and continue to ride this uptrend, bounced off of trend line support here at 1250, and I think small caps continue to break out. Likewise, transports continue to break out. It looks like we're about to break the 69.1 level with conviction next week, and if that happens, we're going to continue breaking higher. The question is, are we building a wedge here? But this wedge can go on for quite some time. I love the fact that the MACDs already corrected and are showing signs of significant strength, which again tell me that the overall markets are going to be bullish over the next couple of weeks and months. Wilshire 5000, same sort of story. This was in a bearish wedge, rather kind of broke down. Perhaps it's extending the wedge here, and which is actually quite healthy. And the fact that it found support here around that 39,000 level is healthy. The fact that we found support at around the 61.8 level, and really it back tested this trend line for a few days is very healthy. So I think that overall the markets are showing signs of strength. All right, let's take a look at the 10-year US Treasury. So this is the most important chart in the world right now. Everyone's watching it. We called the breakout once this trend line was broken here. Frankly, we called the potential breakout when we had the bullish crossover here. The last time we had the bearish crossover was around this area, right at the highs. This was back in 2019. This really suggested that the markets were entering a deflationary cycle. You know, we blame COVID and sure this was a period of time where market shut down, but really markets really slowed down back in 2018, and this was kind of the final nail in the coffin. But once this happened, this suggests that we are in an inflationary environment that's going to last many years. And so while I do expect this to pull back, potentially consolidate here for a while, I do eventually think that this breaks out and creates a multi-year bull run in treasuries. So we'll be watching what happens in this market very closely. Another area that I watch very closely is this high yield index option adjusted spread. This one is it shows me the strength of the credit market. So the lower this goes, the stronger the credit markets are, and therefore the strength of the economy continues. We are in a very bullish wedge here. And if you look at the MACDs, what you might see here is a sign that this wedge is about to break to the upside. And so while this is not necessarily going to be followed as much as the 10-year Treasury, it's a possible sign that the credit markets are not going to be as strong as they have been since 2000, since March of 2020, with Fed support and so on. So the question becomes, when there's a reversal, as we saw back in 2017, we had a period of time where we broke out, but we still were consolidating, perhaps back testing. This is kind of what I expect. We might have a multi-year period of back test, but what it does tell me is that the best gains of the economy are probably behind us, and we'll probably consolidate here for a while, and perhaps even see higher highs in equity prices. But I think what it's also suggesting is that this is we've already started kind of the the volatility phase of the next decade. And here again, here in 2014, we had this breakout where equity still did quite well, right? But the credit conditions really suggested uh, that we were going to get volatility, and so we'll see. This is a very critical chart. Very few people talking about it. I think it's highly important to keep track of it. Inflation index continues to suggest that inflation has broken out and very close to a follow through on this. So inflation is the area that I'd be watching more so than any other in the markets, and it could be an extremely profitable trade. And certainly, if you watch our premium videos, you know that we're covering the inflation trade very, very closely with copper and with uranium and with energy. So I think it continues. Volatility, so far, volatility is suppressed every time it tries to break this trend line. It can't do so. So I think it's healthy right now. I don't see anything in the volatility complex that suggests that equities are going to continue to fall. Um, we'll skip these ratio charts right now, just in the interest of time. Bitcoin continues to be really bullish. I do see some deceleration in momentum, so the rate of change of upward breakout will probably not be as high as it was from 12,000 all the way to 58,000. But I do think this is going to continue breaking higher in the near term. Ethereum, same sort of story. What's interesting about Ethereum is we had major overbought condition, and you broke below the 69.1 level, back tested 61.8. Is it ready to break higher again? It's up 17% on the week, maybe. But the question is it going to create a higher, lower high, lower low scenario? And if that's the case, then again, you're kind of chasing for pennies in front of a steamroller. I think that most of the money has already been made in the last couple of months of the cycle. Litecoin, same sort of story, right? Lower highs, lower lows, and yes, while it can break higher, and is it possible to go to 420 based on this chart? Absolutely, but I think that this trade is kind of long in the tooth, and so the risk potentially is to the downside here. All right, U.S. dollar. So U.S. dollar has broken out from a momentum standpoint here, right? But here's the key point that we'll be watching right now as it relates to gold. 50 RSI is a critical area. This is where we broke down on the dollar back in March. And right now we're retesting that level from the downside. Is 50 RSI going to hold as resistance? Right? This was the area that was resistance for a while, and was resistance rather, and here was support. And so this is going to be critical. If this pulls back here, at least at a minimum to back test, then this could be a really bullish sign for the precious metals. If it breaks through, then I think we're headed towards that 95 area, and it's going to really flush the metals lower. So we'll be watching this one extremely closely with great interest. Ripple continues to build out a solid base, and unlike Bitcoin and Ethereum and Litecoin, it's creating higher highs and higher lows. So I think Ripple is positioning itself for a really nice upside, especially if Bitcoin and Ethereum continue moving higher, which is my expectation, except not as fast as they had been in the past. So guys, thank you very, very much for watching. We're going to make this video available to the public. If you like what you see here and you want to support our work, please pledge your $5 of support, monthly support via Patreon. The link will be in the show notes. And again, if we get to 500 pledges, we will make all uranium videos absolutely free of charge. If we get to 1,000, we'll make all Moniology videos available to the public. So my mission is to make technical and education free for everybody, and I want to educate you guys. That's really the mission of Moniology. I was never the goal to create to create a newsletter and so on. It's to educate and to teach and make you guys better investors, and in the process, becoming a better investor myself. But this takes an incredible amount of time away from family, and so the pledge of support would go a long way. So thank you so much, and have a great week. Take care.